Well, let's address M&M's earnings because the management is addressing the press as well.
Yes, it's a tougher interest rate environment, but despite that, the business has performed very well, delivering a profit after tax of 1,760 crores, and this is after the 136 crore provision that we had to take for the fraud that I talked about earlier. Tech Mahindra has initiated its turnaround. It will be a 2 to 3 year journey. So we want to make sure that we don't set expectations of an immediate outcome. It will take that time. The demand cycle continues to be muted, but the operational rigor we have right now is very strong, and that's what will help us get back to a much stronger path and back to the goals that we've set for ourselves that you've heard in the Tech Mahindra presentation that Mohit Joshi had done a couple of weeks ago. As you look at our listed growth gems, logistics has had some challenges in the integration of Rivigo. That is behind us now. Things are moving very well on that front. That did impact some of the results for last year, as was seen in the logistics presentation, again, 2 or 3 weeks ago. Revenues up 7%, EBITDA margins up. Hospitality continues to do very well, and a business that has a lot more potential. So we will look for more significant growth from hospitality. And real estate has had strong momentum. The industry is doing well. We've launched 8 new residential projects, and the response to that has been just outstanding. So pre-sales for residential up 28%. More importantly, we've acquired 4x the amount of land from a GDV standpoint, and that sets up the business well for future growth. So as you can see, therefore, our businesses are doing well across the board, and that's what's really driving our cash flow. And this is something that we feel very good about. We started with an opening balance of 15,238 crores of cash. What you see here is where that's coming from, where that has been used. The key numbers I will highlight is that operating cash was close to 15,000 crores in this business. CapEx of 5,000. In addition to that, electric vehicles 3,000. We've paid back 3,500 crores of debt and a dividend of 2,000 crores. And even after that payment, we closed the year with 17,600 crores of cash. So obviously a very, very strong balance sheet. Very low on debt at this point in time. It's just the remaining small amount of debt that cannot be prepaid right now. That's on the books. But overall, an extremely healthy balance sheet and one that really sets us up well for the continued growth plan that we've laid out. So as we look at the 3-year projections that we had shared in the past and outlined where we've ended up versus the 3-year projections, we actually ended up better than what we had talked about earlier. So operating cash over the 3-year period was 37,000 crores. Deployment was 17,000. And therefore, from a net cash generation standpoint, we generated close to 20,000 crores of cash in the last 3 years.
If you like this video, then like, share and subscribe to ET Now.